All right, ladies and gentlemen, I hope you had a wonderful weekend. We're about to start our first full week following the rate cuts, and coming into it over the weekend, everybody is still talking about what these rate cuts mean for the economy. So we have a lot to go over. We have a couple of events this week. There's going to be a ton of Fed speakers that can change everything, because on Friday we saw a little bit about how the market was willing to respond, but now coming into the end of September, the beginning of more earnings here, we got a couple of events, and we're even going to hear from Powell, and we should start to get the ball rolling in terms of what we should be expecting from these rate cuts. So we got a lot to talk about. I have the plays, I have the keys, all that good stuff, and then we are going to go over what everybody in the market is asking, and that is, what type of rate cut did we just get? Is it a soft landing, a hard landing, or did we cut because there was a panic? So there's a couple of theories flowing around, and it's interesting how it's still going. So that's going to fill up this whole week. We're going to even get Nike earnings. You're even going to hear a bunch of other rate cuts from a lot of other places. And then over the weekend, there was a lot of other drama. So Chad, we have a ton of things. What I need from you, a thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. And actually, here it is. So like youtube.com/the stock market, but I was going to do the random play. However, we just had rate cuts, and we were talking about making a new long-term ahead of the rate cuts, and pretty much a SPY only or ETF only long-term. So I haven't done it yet, but why I'm bringing it up right now, because I might just replace the random account generator. I know. RIP. So you let me know. Either post a random or let me know what you think. But let me just remind you to get a long term. And if you guys ever go to youtube.com/the stock market and click on post, remember all of the long term posts anytime we're adding to any of these accounts. Yeah, this is a big $200,000 one, but we have the $20,000 one. We have the $10,000 one. This one was Colt Sister. It started really small. I am still posting all of these, so don't forget, the long term is amazing. That's why we want to make another one. So let me know what you guys think, but I hope you're ready for a wild week. And now, run it, baby.
Working to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then it feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
But right off the bat, it's all about the 50, baby. It's still all about the double rate cut that we got last week. That is the biggest news coming into it, and I'm going to have it here in colorful writing. The propaganda is already flowing, and what do I mean by that is that financial media is already trying to put this rate cut in a box. Now, I will tell you, we don't know what is about to happen yet. Do I have an idea about a hard landing? Yes, I do. Do other people have a lot of different ideas? Yes, and that's what I'm trying to tell you here, is that there is nothing set in stone. But if you have been paying attention ever since this was happening, this was that short-term bullish reaction we were talking about. Ever since we got this double rate cut, everybody's talking about how this is a good thing. And now, even over the weekend, a lot of people were saying how no, you need a new playbook. We've never seen anything like this. Hibbity bobbity boo. But I have to disprove that. And that's why I'm calling it propaganda, because the fact of the matter is, while retail media, financial media is talking about that, people like Bank of America, they're going back from the 20s and they're going to every other rate cutting cycle to see what happened. It's not as if we don't have any playbook for this. The fact of the matter is, what we're going through is a little different, but you are having a good economy for now. You are cutting while rates and the stocks and everything are near all-time highs, and that's kind of the idea. But people are saying it's going to be good moving forward, and this is what I was telling you guys last week, how some of the narratives may not even want to buy value stocks. That's kind of what people are saying, and they're trying to say that this rate cutting cycle is going to be different than every other one, and quite frankly, I do not agree with that. So I wanted to start off with that pretty picture and show you, but it's very simple. Over the next couple of weeks here, we are going to figure out what type of rate cut we just got. So anybody telling you to make up your mind now, I think you're probably going to get clapped on that idea, because we have to get to the end of the year. We have to get to the election. And then before you know it, there's a lot of implications for 2025 that we need to be talking about. But with what we just got in the history of it, we need to know now, what type of rate cut did we just get? Is it a soft rate cut, a hard rate cut, or a panic rate cut? And really, the question is, are you cutting rates into a soft landing? Are you cutting rates into a hard landing? Or are you cutting rates because of an economic panic? And like I'm saying, if people want to tell you you need a new playbook, I strongly disagree, because there was soft landings and there was examples in 1984, 1995, even in 2019, the mid-cycle adjustment. However, those weren't 50 basis points, or at least not in 2019, and just any of the soft landings through the 90s. So that's one of them. But you have an example of cutting into a soft landing, and what happened after that. This is what Wall Street is trying to game out right now, because if you figure out what type of game plan we're in, last time you've got cuts into a soft landing, the average return is the S&P going up by another 10% in 6 months. The other alternative is cutting into a hard landing. That's like 1973, 74, 80s, 81, 91, and 01, and even 07, and even 2020. Those were something was happening, or I guess 2020 was more of a panic cut and people reacted to it. But usually in those instances, if there is an economic hard landing and we're cutting into it, the market in the S&P usually goes down in the next 6 to 12 months. And then the final instance, if you cut because of a credit event, like a credit panic, believe it or not, that's actually good. And even 2020, even 2023, it wasn't a rate cut, but remember, there was the panic with like SVB, the market and everything went up there. So that's what people are trying to find right now. And although everyone's saying you need a new playbook, the way people are putting it now, you are a mix between cutting into a soft landing and a panic. Again, it's not like the Fed wasn't reacting to stuff and isn't worried about certain things, but for the most part, everybody feels like the economy is good and that we shouldn't experience a hard landing. So now they're feeling we're in the mix between soft and panic, and that does have some bullish implications. So that's what we're going to find out by the end of this week with all the data and everything else we're going to get. We're going to see how this plays out. But remember, last week was a big deal, and now we're going to be finding that out. And until the election, this question is, I think, what we're going to figure out. And once you know soft, hard, or panic, I mean, by that point, you should be able to make a play on that. So watch out for that. That is the first key. Now coming into the second key, regardless of what you think is going to happen, I need you to understand that it is going to take time. Even over the next couple of months, we'll see how the rest of the bad September seasonality plays out or doesn't. But for the most part, you need to give things time to develop in this rate cut situation, because I don't think it's going to give us answers. And yeah, things may get bad following the cuts. And that's an idea that I have here with the hard landing. But if that's going to show up, it's going to take a few months, and even for now, this is where things get weird. This is where the market is actually going to trade very weird over the next coming days and weeks, is that although people have expectations for bad or good economy following rate cuts, for now, the market is priced as good as it gets, and that is the paradox. And what I mean by this, yeah, you can be worried about things coming up in the future, but now that you got rate cuts, everyone's saying the economy is good, things are at all-time highs. Earnings expectations, not only were they already up, now that people are expecting rate cuts and easier policy in the future, earnings growth and expectations even in like 25 and 26, those are starting to go back up now. And this is where it's weird, because it's like, well, yeah, we want to be bullish and we want things to really go up, but as of now, the market's already pricing in a lot of very good future growth. And this is the paradox to it all, because you're getting your rate cuts, you're getting assets at these high of prices, but it's like now anything past these points, if people are going to keep buying it in, that's pricing in something even better than as good as it already can be. So that's why we got to keep a close eye on everything that moves forward from here, and it will be interesting, but we'll see if anything changes, or if any of the earnings that are about to start coming out, maybe this could change it. So watch out for that. And then the final key coming into this week, you do have events. So there's going to be a ton of Fed speakers. There's going to be the PMIs. I think you're even going to get a little bit of that tomorrow. And then the PCE is going to be on Friday or Thursday. That's the biggest piece of data that we have. But But I'll tell you right now, do not underestimate those Fed speakers. We saw what happened on Friday. The fact of the matter, since the SCP is fresh and everything, even the initial jobless claims, that's going to come out on Thursday. You might get a big move. We saw the bonds move pretty big off of the last week's initial jobless claims. And I think the fact of the matter is, coming off of all this data, Fed speakers, initial jobless claims, little pieces of data, the market can move off of it. Granted, as long as you don't get dislodged from the path, I don't think anything major will change. But in the meantime, the Fed speakers, though, if they do say anything intraday, that can move the bonds and equities. And we got a little bit of a crash course on that on Friday. So watch out for that. And then the only other final thing I'll say is just keep an eye out for Friday, because if we don't agree to like a budget, I think by Friday, that's it. Congress goes into recess until the election. And then if we don't have the October funding thing, then you're going to do that like debt continued resolution fiasco. Maybe bonds or gold trips out, but we'll see when we get there. But other than that, should be very straightforward. Like I told you in the beginning of the video, there's a lot of other countries that will either be raising or cutting rates. So we'll see if that throws anything into it. But for now, man, this is now where do things go now that America has started the cutting cycle. So I hope you're ready, but let us get into the plays. So, right off the bat, I got a couple of decent plays. We even made a few plays on Friday, but the first one I'm started with is Intel and Qualcomm, because this news was absolutely nuts on Friday. I don't even know how we got it early. Like, I'm telling you, we had a 2-minute jump on everybody. You could even go see the stream alert, but if you were there live, you saw it, man. I think a lot of you made a ton of money. You were able to snake it just because we got this rumor very, very early, and even then, over the weekend, this actually still has legs. So the word is, or the rumor on Friday was that Qualcomm may be interested in buying Intel. It actually started a couple weeks ago with Qualcomm saying they could be interested in parts of Intel, and then we heard on Friday that Qualcomm may just be interested in buying all of them, and it has like a unique thing about it where Qualcomm could actually buy them without the regulators getting in the way. But where we stand right now, it seems like we haven't heard back from the companies. We don't know what's going on with their deliberations, but people have said that Qualcomm has been talking to the government to see if this is possible. So I think it's going to be exciting. I think it'll cause plays on Intel, or at least get things spicy into the earnings. I did say if this is going to fall through, because one, I thought it was fake because of how big it was, but the fact people are still talking about this, if this isn't going to go through, you're going to hear, yeah, they were interested, they made an offer, but then Intel declined, and then we'll see what happens with the prices. But if this does get another development, this could be absolutely nuts. I'll go over my plays when we get there, but this was the first big one. I'm definitely going to be watching that this week. Watch out for that. That's play number 1. Then play number 2. This one's kind of related to some news last week, and I've been hearing a lot of talks about this name, ETN. So the play is the data centers. Remember, like IRM, and we've been talking about that in both storage and then even utilities for AI, even those REITs. Well, ETN, they're an energy company. They're getting brought up now. And then on Friday or Thursday, there was that news there with Constellation and Microsoft. They made a deal for powering like nuclear for their little AI island or whatever. And Amazon, there was Amazon rumors and a lot of other names that started going. So ETN, this got a lot of talks over the weekend. People have been bringing this one up. The only problem, this thing's near all-time highs, so I was like, maybe this could be a top-tick contender for the long term. But for the most part, if we do start hearing more about these utility AI data center type plays and they start going up, there might be a breakout with some of them, and I think ETN, this one might get legs. So I don't have a play on it for now, but I will be watching that. That is play number 2. And then finally, play number 3, my friends, gold. And believe it or not, I haven't done this since the beginning of the year, and it was painful, but we got out of it with a green somehow. But short, and the way I'm looking at it in the next, and maybe I might be very, very early on this, but I think the logic will remain, just like you might see it happen if people do start eating up the dog BS that, oh, you need a new playbook, it's a soft landing, and like you really start to see that reflected, kind of like with what we saw with the bond curve last week. then I would short gold. And what I mean by that is if people keep buying this soft landing narrative and all of that, it doesn't make sense. Then that gold would be going up like that, little by little, just like the bonds would kind of fade and might hold a range. I could see the same thing happening to gold. So if we find out that this is a cut into the soft landing, nothing bad emerges from here, I would be looking for gold to the downside if there's nothing else we could grab to the upside that still shows value in that type of environment. So wanted to share the narrative, and just because we were even talking about it last week with the fact that even things like value, depending on how people want to react following these cuts and where things go, we're going to find out what sort of shape this beast is going to take following the rate cut. So definitely keep your head on a swivel. But those are the main plays. As far as everything else, I did make a decent amount of plays on Friday. So I did go for a SPY daily. There was the witching, and there was a lot of moves. It actually ended up doing good most of the day. I put like $30. I think it went up like 20 or 30%. And then towards the end of the day, it got clapped there. So that was a $30 loss. And then the Intel news, that's it. I chilled, and I got that news very early. I was able to snake next week calls for 7 cents. They went up. I think they closed at like 30 cents. They went as high as like 50 cents. So that was a great gain there. And even as that went up, I grabbed 50 of the next week puts for 18 cents. I don't know what strike price the puts were. I thought I would have wrote it down, but I grabbed the $20 put, so pretty much 20 to 25. I could get clapped in the middle, but I was already up a lot. I plan to see where these are at Friday. If there's a little bit more legs, make them free and then go from there, but definitely got to play Intel, and I have my old Intel flip shares, so we'll see how that plays. And then I threw October 18th. I grabbed October 18th, 110 puts. I grabbed 2 of them for 18 cents. The whole logic there, if the deal would be bad for Qualcomm, usually anybody spending that much, the buyer, they go down, and that was the first reaction. So wanted a little bit, and I grabbed those while Intel got halted. So those are the only plays I made on Friday. I am still holding /ZB/6J and the Nike shares from last week. So I'm going to be holding those. If anything, I'm probably going to get rid of the yen. I may even want to go short so I could hold the bonds in the short term. Remember, this hard landing narrative, it relates to the bonds and the yen. And I was even telling you guys, so don't get, if I'm like, oh, I want to short the yen, you'll be like, oh, you're short the yen. No. You got to think about it. Remember, we were saying if there is no hard landing, what would happen? The yen is probably going to come down and stay within the range. So what I'm thinking, a long end of the bond curve, because that still is cheaper there, and then short the yen. It's kind of its own little carry trade to a degree, but that's kind of what I'm thinking instead of longing them both. So watch out for that play. I'll give you guys an update if I end up doing it, but considering I made a play on those last week, wanted to give you guys an update, but I'm not really worried on any of them. I'm just kind of getting creative, but I do think a lot of things are going to hold a range in the sense I don't think like certain yields, bonds, even gold, until we really find out where things are going, I think it'll hold a range. I don't think it'll flush, but we do want to pretty much keep our eyes out for the next big development. So that's all I'm holding, and I'm still in my old like Vanny, Baidu, MPW, and Intel. People, if they're going to ask, I'm going to send them here to the video. So remember, we went cash a while ago, but all those plays, pretty much Baidu until I could get out with a green or I see China flip after their rate cuts. I'm probably going to hold that. MPW, I'm probably going to hold that till that one goes green. We're only down like 17% on that. Intel, I'm going to keep holding that one as well. And then Vanny, hold till like end of the year once we get an update on whether or not they get that approval there with that GLP-1 stuff. So that's the plan. We're going to see where everything else goes this week, but I think it should be exciting. And if it's not, then it's going to be either low liquidity, and if it is, it'll probably be the crazy seasonality. So, Chad, I hope you're ready, but Ted, sir, watch this, ladies and gentlemen. Make sure Hydra Healthy ready to go. Make sure post here, watch this. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, it only works if you have the heart of a child. Oh, my God. A Chad sent me that, baby. Oh, my gosh. The heart of a child, baby. Don't ever forget. So I hope you guys had some good rest. Get ready for another week. Stay awesome. Drink that water. Stay hydrated, healthy, all that good stuff, too. I'll see you in the AM and